Hello, Warriors. This is Dale Pinkert at TradeGATEHub.com, and we are sponsored and powered by TradeView Markets. Well, traders, Moses came down from the mountain, and he laid down another law. Don't take on risk. Okay, so Powell came in like a hawk. I've been talking about that all week. I thought he would do that, and that it would create some trading opportunities. I know this is FX Street, but I think it's real important to look at the action here that we had in Apple. Apple is 9% of the market, 7%. And this whole recovery rally that we had after the initial break, Apple rallied right into a gap, right? So here's the gap. You even had a gap on the daily. We gapped down that day, right? See, this is even more prevalent here. You could see it. So the low of the gap was 71.31, okay? And today's high was 71.05. So it wasn't even able to fill the gap. And with Apple being such a dominant player in the averages, to me, it looks vulnerable. This was about a $10 break right here. So another $10 break from here is going to take you to your 50-day moving average. I think we're in risk off mode until Apple gets there. And that doesn't even guarantee the end of the break. If we take out the 50, why not go to the 200? And another gap, as you can see. So between 161 and 157.60, I believe is where Apple will be. That's another $6 to $8 lower in the coming days. Perhaps we'll finish this off into Labor Day. And this is going to put pressure on everything. The caveat here, and what's interesting, is with Powell talking as hawkishly as he is, take a look at the 10-year. 10-year actually peaked yesterday up here, and it tried to rally and put in a lower high. So to me, it looks like yields are peaking here, and they could be on their way down. Maybe risk off might give it a hand, but even the bonds are higher on the day, right? So to me, it looks like yields are coming down. It could be risk off. I think it should be, positive eventually for the market. And this is not, I'm not in the bear camp that the S&Ps are on their way to take out 3,600. But for them to trade back down towards this 4,000 area was something that I talked about for a while. It's important that we hold here to have a continuation move in the market back above the 200, which I think is a little too pat for it to be the major high. I will only become longer term bearish with closes back under this trend line at 38.42. So let's get to the conflicted currency markets right now on this special report. Powell and Moses at Jackson Hole. I've been talking about this speed line that we had a throw under or throw over underneath, and they started squeezing shorts right here. This close kind of leaves it neutral. It doesn't make me want to get long, doesn't really make me want to get short, but it does have me looking for, if we either hold here next week, the par level, or we flush one more time down towards 98. I believe that. And I believe the second scenario is more likely. When I look at the dollar index, which is a basket, we move lower. We shook out all the longs here, and we're trading back to, last only down 9 ticks on the day. And if you see this descending line, if we had closed under here, and, the market's still open, but I doubt it. But, in this business, be prepared for everything and anything. So if we had closed down here, it would have signaled the top of the dollar. But this type of action here tells me that we have a chance to make new highs. If I just take this formation, 7.5, about 130, 200 could take us to 110.50. If that happens, we'll get the new low in the euro. I also said that I'd be looking for shorting opportunities in the yen. It looks like it's going to happen from higher levels. I'm not going to short this close right here. We did catch this. We moved sideways. So possibly this is a wave 5 that could carry all the way up towards, I know a lot of people are talking new highs, and I won't rule it out. But what I see here in yields is telling me that the yen, I should be looking for a short because yields are rolling over despite hawkish talk. It was kind of sell the rumor, buy the fact in yields, and it was like sell the rumor, buy the notes or buy the bonds or even the TLT. So before I get back to the yen, look at this TLT. So, the way it looks to me is that you had your first wave, we corrected 78.6, and the bonds look good to me. If you call this a head and shoulders formation, I know I'm jumping around, but so is everything else. So I'm just in tune with everything. If we had from here, this rally, if we get, was from 108 to 120, that's 12. So say this is a money wave and it's a C wave, because I still think it's a bear market. I don't think we're moving into a bull market, but that'd be about 20 handles. Okay, so from today's lows, that could take you up to 131, 132, which is a major breakdown in the bonds. And so that's going to be significant. I think yields are going to drop. Eventually, I think that's going to set the stage for the dollar peak after making new highs. Perhaps my patience will be borne out in Aussie. You guys know that we're talking about Aussie down here, and I've been looking for buying opportunities, and I prefer the commodity currencies. Perhaps we have a washout now in Aussie, and we trade down to 68.5. I have a speed line here. Let me just extend it. That's going to come in a shade under 68 next week. And this could still end up being a right shoulder here of a head and shoulders bottom. So, I'm bullish commodity currencies, which means I'm looking for buy spots in Aussie. And, we could break another 150 pips from here, especially if the dollar index does blow off to the upside. This is going to be an extreme test for gold. We're pulling back here. That 61.8 level could be challenged, and we'll see if it's going to take that out. Silver holding up, it was a little better, but we'll see. Perhaps this 1870 level is going to give way. I'm going to be looking to see if we post higher lows sometime next week. But the way it's acting, and with the dollar acting the way it is, I think I'd postpone new positions in precious metals until I have more confirmation of a dollar top up here that could take us up towards 110. So that'd be another, 200, which could take the euro back under 99 towards 98. So I think this is the last hurrah for the dollar. I don't think commodity currencies are going to make new highs. I don't think, well, now that I look at it, it could. But I'm still looking at this as the last hurrah in the dollar. My preferred longs will still be in commodity currencies. But right now it looks like risk off, and Powell is having his way in the markets. And I really think, how markets all go up together and down together. So dollar goes up and everything goes down. S&Ps go down, metals go down. The only thing really not going down are yields, which, tells me there's a little bit of flight to quality. They're buying the bonds. I guess they think Paul's making another policy error and he's going to tighten too much and send us reeling into a sovereign debt crisis, as well as one of the worst recessions in United States history. But that could be postponed until next year as well. So talking tough at Jackson Hole has definitely had its impact. The VIX has had a good week. right? The gap up that we had, just like the gap down in S&Ps, all it did was pull back into the gap. Looks like we're going to blow through 24, and perhaps we're on our way up towards this 2930 level by the time the S&P's bottom. Closing over 24 could definitely take you towards 30. So that's the way the market looks right now. Cash is king. Cash being moved into the bond market to capture yields. You have risk off in equities that I don't think is going to conclude until we have a major low or an important low in Apple, which could be between 161 and the gap here in the 200 days. So that leaves plenty of room for a few weeks. With that occurring, you're going to get your last blast down in the euro, maybe towards 108. Looking at the pound, maybe we're going to 116 or so. And I will be looking for reasons to get short US dollar yen in the coming days. I want to see what the RSI reading looks like. And I want to see what the 88.2% retracement which comes in right around 38, 36. So we're still 90 pips away from that. So if it starts to lag and the Dixie makes a new high, but the yen isn't able to make a new high, which is, back here at 39.38, that would be a pretty good market tell. And we've already, diverged here on the daily. Even if we make new highs, it won't confirm. And the bond market's telling me that I should be looking for shorting opportunities there, and in the commodity currencies as well. Maybe Canada has enough to trade to 78.6. But, the trading patterns, especially when you have a big day like this, unless you think they're going to reverse it, which things are only getting worse right now, a lot of red ink, is that when you have a week like this and it closes on a Friday week, you normally get follow through on Monday. And if there's a chance for some type of counter trend move for a scalp, I think this can take more than a couple of days for the market to rinse people out of, their short dollar positions, their long equity positions. But I think that we're setting up what could be a pretty good buying opportunity in S&Ps lower, in everything lower except the dollar higher. So that's the way I see things coming in and going out for the week. I hope that the analysis that Mike Venezia and I provide both in our main chat room, the trading room at TradeGATEHub.com, powered by TradeView Markets, is adding value to what you're trying to accomplish as a trader. So it's almost like you had two different trading days within one today. So you had a short squeeze in euro, and now it's giving it all back. But that gap fill in Apple was really the feature for me, because it's really the market. And the weekly is giving what I call a 2-week reversal. And look at this confluence as a number that I talked about earlier in the broadcast. It's going to be very key. This is where the weekly, these are weeklies. The weekly 50-week and 200-week come in right around that 159 area. I think it's a magnet. Everyone have a good weekend. I know it's, a lot of money is changing hands, but keep your perspective from a survivor that, money comes and goes, time is gone forever, make it count. So above all, trading is what we do. It's not all we are. And remember to not just count your pips, count your blessings. And if you have a winning trade, do not do cartwheels. And if you've taken a hit, don't get into a fetal position. The most important word for traders, and actually in life, is next. So I'll see you next week. Adios. Have a good weekend. Get ready. Who said August would be quiet? It's going out like a lion. Adios.